Hello viewers and welcome back to the Dukascopy TV studio. Joining us for part 2 of his interview is John Hancock from the International University in Geneva. John, thank you for staying with us.
Great to be here.
Now, obviously in our previous interview we were talking about the US economy and its direct recovery, but now I'd like to talk about something that's gaining a lot of traction at the moment, and that's US wealth inequality, the idea that assets are distributed unfairly amongst American citizens. Can you explain a bit more for our viewers, please?
Well, I think you're absolutely right. This has become the hot button issue, I think, in the United States and maybe elsewhere as well. It's been slowly building, but suddenly we have President Obama wading into the discussion and saying this is the single biggest issue that threatens the future of the U.S. We have the new Pope wading into this issue, saying that inequality is not just an economic problem; it's a global injustice that's being perpetrated on the poor and the undeserving. So people are very concerned about this issue. I think, though, it's important to break it down and to look at two separate questions. The first, of course, is the question: is it actually true? I mean, is the world becoming more unequal? Are the gaps between the haves and the have-nots increasing? And the second question, maybe the more important question, is even if it's true, is it something that we should be concerned about, and is it something that we can actually do something about? On the first issue, it's a very complex picture, and certainly much more complex than a lot of the commentary on both for and against this question suggests. I mean, on one level, you could make a case that inequality is actually shrinking, at least globally it's shrinking. You only have to look at the growth rates in countries like China and India and the rise of the new middle class in these countries to see that, in fact, largely thanks to these giant behemoths and their remarkable growth rates in recent decades, that what was a defining feature of the global economy even as recently as 30 years ago, this widening gap between the rich world and the poor, the first world and the third world, the haves and the have-nots, is shrinking, and shrinking quite dramatically. So you have a situation in China, for example, where in 1930 the average life expectancy of a Chinese person was just over 30 years. Now it's pushing Western standards over 70 years. Per capita incomes have increased from roughly $900 per capita, now pushing upper middle income status across the board in China. That's not to say that there aren't huge inequalities in China or in India for that matter, or that there isn't still problems of massive poverty, but it's basically true that when these billion-plus economies grow as rapidly as they have over the last 30 years, that gap between the rich world and the poor world starts to shrink. What used to be called the Great Divergence after the Industrial Revolution is becoming a great convergence. In individual countries, the picture gets even more complex. Some countries, for example, over the last 10 years, we've seen signs within the country of shrinking inequality. In other countries, such as the United States, there's been signs of a growing wealth gap between the rich and the poor. So it's easy to treat this as a broad brush problem, but in reality it's a very specific problem and specific to certain countries. It's not even clear that in the countries where inequality has been growing, that the problem is as severe as the critics suggest. For example, the Congressional Budget Office just came out with recent estimates of inequality in the United States over the past decades, and its basic conclusion is that, in fact, inequality shrunk between 2000 and 2011. And the reason for this is that usual measures of inequality, cash income, failed to take into account impacts of changes on the tax system to poorer or middle-class segments of American society, tax breaks. They failed to take into account government or private sector transfers, Medicare, Medicaid, social assistance, unemployment benefits. If these things are put into the picture, then in fact it's not true that the middle class is shrinking and that the lower class is losing out, and that the gap between the rich and the poor is is widening, at least until 2011. In fact, the picture that emerges is that, in fact, both ends of the spectrum didn't do too well out of the Great Recession, which we'd probably expect, because the upper income segment of American society is much more heavily dependent on asset prices and investment incomes. They suffered dramatically during the Great Recession and the financial crisis, and they have come out of that crisis admittedly much more quickly. So since 2011, the richest 1% of American society has done significantly better than middle-class America or the poor Americans. But the idea that somehow the poor are getting poorer and the rich are getting richer is...
So why is this being spoken about a lot more now then?
Well, I guess the critics would say it's being talked about a lot more now, and it's on the political agenda because there's a problem, that inequality is growing and someone's got to do something about it. And that's certainly the response we're hearing from, for example, President Obama, and the Pope has urged action on this pressing global issue. I think there might be a more simple answer. I think we all suffered during the Great Recession. I don't think we've just lived through a very bad time. Some say the worst time since the Great Depression. And when things are bad, fingers start getting pointed and people say, someone else must be to blame for this. And one response is, it's the rich. It's the haves. It's the founders of Google. It's the rich capitalists. It's government. They're to blame. I'm feeling poor because someone else has made me poor. But in reality, of course, we're all a little bit poor as a result of the Great Recession. And in fact, probably at the low point of the downturn, the rich upper percent suffered even more than saw their wealth shrink even more than the lower half. So there's a kind of scapegoating going on here. It'll be interesting to see that if this recovery takes hold and if the recovery continues, if it will still have the same kind of resonance with op-ed writers and pundits and voters. And that itself is an interesting question. Does it have a resonance with voters? I mean, we're talking about it. We see it in newspaper columns. We hear it argued on television. But the reality is, this hasn't translated into a viable political program. I mean, in Switzerland, for example, just recently we had a vote about capping the incomes of the highest income earners in the country, and it was lost decisively in a referendum. In other countries, there doesn't seem to be an active program to address this issue. We had the Occupy Wall Street movement in the United States, which had its brief moment of glory, but very quickly dissipated. It's not to say that people are not concerned about this. It's not to say that people are not angry about this, but maybe they're at a point where they don't see an obvious answer to the problem. And in fact, they might even be at a point where they see it as being, in a sense, an insoluble problem. The wealth inequality has always been with us. And in a sense, maybe it's more with us now in this turbocharged era of globalization and technological change than it's ever been before. You can't have the innovations. You can't have the growth. You can't have the Googles of this world or the Apples or the Samsungs without the inequalities. In a sense, that seems to be one of the inherent dilemmas in capitalism, that you get the churn, the creation, the growth, but you also get the destruction, the inequalities, the wealth gaps that are inherent in the system. It rewards winners and punishes losers. In an Olympic race, ideally everyone would win a gold medal, but in fact they don't. One person wins the gold medal, and it happens to be Larry Page in this chapter of history we're in, not me. He gets the 30 billion, I don't. But does that mean he should be stripped of his gold medal and taken down to my level, or that we just have to live with it?
And finally, in your opinion, what is the solution? What can be done to resolve this, if anything?
Even if inequality is growing, is this something to be, is it something we can do something about? And in fact, is it something we should be actively doing something about? We have to bear in mind that is the problem relative inequality between social groups, between the classes? is that more important than overall poverty or overall deprivation in terms of wealth income? I mean, if the poor are getting richer, but not as rich as the upper percentiles, the upper segments of American society, is that something we should be concerned about, or is it in fact something that we should actually applaud? Is it better to have everyone uniformly poor, or is it better to have everyone getting richer, but some getting richer than the others? For example, the two co-founders of Google. I've read recently in Forbes magazine earn roughly $30 billion a year. That's many times more than I earn, vastly more than I earn. Is this something I should worry about? I mean, should I be envious and resentful, and should I be marching in the streets to encourage this vast income gap to be rolled back? I mean, I didn't invent a logarithm that improves the way people search the web. I use Google every day, and I do it for free. I think my life is better off for having Google. They came along with something that the world needed. They give away for free, and the world happily uses. I mean, the last estimates, 5 billion people use it every day. Is that a bad thing? Should we be more concerned with helping me or you or others that are far less fortunate than us improve their skills, up their game, enrich themselves, and be a little less concerned with the Google founders and their income gaps? These are as much economic questions as philosophical questions. I don't think there's an easy resolution, but it's not as simple as perhaps the Pope or President Obama have suggested.
Okay, John, thank you very much for coming in.
Thanks for having me. Not
a problem. And thank you, viewers, for watching. Make sure you stay tuned to Dukascopy TV for more updates and exclusive interviews. But for now, goodbye.